Welcome, everyone, to today's Cake DeFi Twitter Space update. We have quite a few exciting topics to discuss with you today. We're going to discuss quite some nice company updates. We launched the Earn product yesterday. It was a bit of a soft launch. We're going to ramp up a bit of the marketing and kind of announcements around this a bit later this week. You're going to see that, and we're going to discuss this a bit today. Also, we're going to discuss, obviously, potential inflation numbers that are going to be coming out in 2 3 hours. So, if you're listening to a recording on this or watching the YouTube video here, then this you may know more than we know right now. And last but not least, we're obviously going to talk crypto markets, which are tightly connected to what's happening on the CPI, expectation of the Fed meeting next week. So, yeah, I think 21st next week. So, going to have quite a lot to discuss. If you're listening in for the very first time, we're doing this on a weekly basis, always on Tuesday. We're doing it live on Twitter as a Twitter space. It's going to get recorded. We're doing this on a podcast afterwards. And we're also we're also recording this as a video for YouTube and then for various social media channels. And so, yeah, and as always, we do have co-host, head of community, Fabio, here with us on the call. Last week, you had to do it all by yourself. Everyone else either was sick or had to bail out because of other clashes. So, thanks so much for doing this. How was it last week doing it all by yourself?
It was quite an experience. I was a little bit anxious in the beginning. I didn't know what if I could fill 20 minutes or 30 minutes just by content. It was a little bit shorter than usual. I think we finished about 45 minutes in. Glenn joined me in the end for a brief period of time, but I'm very happy it's over, and I'm very happy that you're back. It feels much more natural and to have a conversation instead of just ranting on for 40 minutes. So yeah, very happy we are back in our normal format.
Yeah, me as well. Looking forward, and also regular format. I think let's dive right in. I think we should start. I mean, I have a couple of cake updates I want to go through, but let's start with the major one. Let's talk about Earn. I don't know, Fabio. I think you have seen a bit of the feedback already on social and on Telegram and so on. Do you want to do a bit of an intro and then maybe tackle already some of the early questions? I'll do a bit of a screen share, show a bit of a few things. Yeah, but do you want to dive in with that?
Okay, sure. So maybe in a spirit of transparency, I saw a few of your tweets and a few of your mentions, and then of course yesterday we launched the product, so it's available on the app. If you open the app, you can go to Bake, and you see on top you see the Earn product. And a few people were wondering and also asking below our tweets, why is there not an announcement yet? So important for you to understand is we made the decision to go with a soft launch that gives us a few advantages. It's not that everybody's coming in at the same time. It spreads out a little bit, and it gives us not a beta test, but what's happening afterwards. So we tested this before internally, but so now we can see the users starting to flock in, and as soon as we feel 100% comfortable, then we can push out the announcement and get the big chunk of users to join the product. But what is it? So this is, in my opinion, it's a little bit of an industry first, because so you need to see there is several brackets of users, and a lot of users they struggle with the idea, what is staking, what is liquidity mining, this fairly deep down the rabbit hole. A lot of users, they're just looking for simple products where they can earn a yield on. And what is so new and what is so great about these products is, so we started with Bitcoin. We might add other currencies along the way, but let's just talk about the Bitcoin part. So if you own any Bitcoin, you can just enter this product and you can earn an industry best lead, I would say, with currently around 11%. If you go to other lending providers, or if you other providers that offer similar products, mostly their yields are around the single digit percentages, 2%, 3%, 4%, something like that. So 11% is above average, definitely. And so there is a few key questions there, is how the yield is generated. And the other question is, how are you protected? What are the protective measures that happen in the background? And both are quite interesting. So if you're part of DeFi or CDFi, or if you're a DGen and you know about DEXs, for example, on a DEX you have the possibility to provide liquidity. So you're basically adding two pool pairs to a DEX so other people can use this liquidity to trade with. And so there is an incentive, because why should people provide liquidity to a DEX? There needs to be an incentive. So this is where yield farming or liquidity mining comes in. This is the incentive that people get to participate in the DEX, and this earns you a yield. But for a lot of people, it is quite a mouthful to comprehend how to participate. You need to switch 50% of your assets. There are certain risks that, like impermanent loss, that you need to do a deep dive on, that you need to understand. And on the Earn product, we basically do everything for you. We protect you against the risks that come along the way. But before we jump into the technical details of that, I just want to maybe hand it over to you if I missed out anything on the broader introduction of the product.
No, I mean, if you do to kind of maybe give a bit of an overview, traditional kind of lending or earning has been happening by two ways. Either you do it directly to institutions, where we're also going to have another step up where we're going to be completely transparent about if you're lending to other institutions via Cake, we're just an agent there, like an intermediary. But then we're going to force the institutions to be completely transparent about how they generate the yield. That's going to be industry standard at some point. At the moment, there's no more black box for people anymore. And so that's going to be one. And the other one is obviously doing it via smart contracts in the DeFi space. And yeah, we want to kind of be the industry leader there as well with the launch of the Earn product. Yeah, but I think you explained that really nicely. But yeah, don't want to interrupt you.
Okay, so the target group for these products, if you're with us for 2 years and you're a yield farmer, you're a liquidity miner, you're all in this ecosystem, you understand everything, the Earn product is probably not what you are looking for. Honestly, this product is much more catered to a newbie. So we have this wild gap between people that are using our platform. We have the DeFi degens, they understand everything, they're participating in liquidity mining, they understand all of these concepts, they are trading and moving their liquidity around to be in the best and most profitable pools, and they're super advanced. But on Cake, we also want to offer the simplicity to somebody that is completely new to the ecosystem, that doesn't want to bother with switching 50% of their assets into another currency, that just wants a user that holds a little bit of Bitcoin and he wants to earn a reward on their Bitcoin without a lot of knowledge. So and this product is catered to those people. And it's fairly simple. You come in, you have a little bit of Bitcoin, you enter the product with, I think it's one button click and one checkbox that you qualify. And from then on, every day you will enjoy rewards. And not only that, the product is structured in a way that you receive a volatility protection. And a volatility protection, it's a nice word, like Apple, we are using nice words for these things. But what it comes down to is practically this gives you a protection against impermanent loss. So the main risk, if you're a liquidity provider on a DEX, is an impermanent loss risk. This is if the assets differentiate in price. So one stays the same or one goes down and the other one goes up, then the pool comes out of balance and one side gets more than the other side. And this is happening because of volatility. And the protection that Earn offers is we're protecting you like 1% every day. So every 24 hours that you stay into the product, your liquidity protection goes up by 1%, to a total of 100% after 100 days. So like if I would recommend this product to my mother or to a family member that doesn't want to participate in liquidity mining, like for example, my mother and my brother, they are customers at Cake, but I recommend them just use staking, use lending, because they're fairly new in the ecosystem and they don't want to bother with anything. So Earn is the perfect product for them. I just recommend them, okay, do a small amount and keep it in there for 100 days at least. So if your time horizon is less than 100 days, I probably wouldn't recommend this instantaneously to you. But for example, my mother, she's in for the long run. I kind of orange pilled her, and I told her 5 years time horizon, and with a small amount of her Bitcoin, she's on cake, and she's in lending. I will make the recommendation to her to like switch a part of her lending into the new earn product and just keep it in there and enjoy the liquidity protection that she will get on top of that. Yeah, did I miss anything important?
No, spot on. And the other things, obviously, rewards are gonna happen every 12 hours, so that's also obviously very nice. And then you can see all the time what your actual value is, and if you actually suffer from impermanent loss, including your protection. So you can just track that and see if you exit, would you have any impermanent loss or not. But if you stay for at least 100 days, you wouldn't have much to worry about unless there's really an extreme event. We're also going to show what we called in the volatility protection in the good old days. If you have been with us for whatever 3 years or something, we called it the secret cookie stash, SCS. We basically rolled over some of those funds as well from the secret cookie stash, so that the volatility protection has some of the original funds that we had accumulated from then and were never claimed. And so we wanted to kind of roll those over as well. Yeah, I'm really excited about that product. It's industry first, as far as I know, completely transparent. Again, that's basically lending into DeFi protocols. You're going to see a step up of that as well when working with institutional lending, where the institutions have to clarify and explain as well how they're going to do that lending, so you can really track and trace everything. At the end, it's all about trusting because of the transparency. So yeah, I'm quite excited. It's been a bit of a soft launch yesterday, today, tomorrow. It's going to be when that marketing push is going to happen a bit more. Emails are going to go out. PR stuff is going to go out. So yeah, try it out. I linked it up. You can simply go to app.cakedefi.com/earn. I also linked it up under the Twitter space. Or if you then watch the YouTube video, listen to the podcast, it's going to be in the show notes afterwards. Any other questions that you have seen that we need to answer around earn? It's generally, it should be relatively straightforward. Maybe at the beginning people are going to be a bit confused, but then afterwards it should be relatively good, relatively nice. But did you see anything?
No, I think the main two questions or discussion points were, can you elaborate a little bit more on the volatility protection feature? We just did. And also, if you were on top of the screen on your mobile phone, please note that we are trending or trying to be a mobile first application. So this earn product is
I want to be
available
clear. We're actually going to go full mobile over time. So we're going to phase out functions on the web app and we're going to go full mobile app. So you're still going to have access to your portfolio and stuff, and you can see a lot of things. But if you actually want to do things, we're going to go mobile only. That also has security reasons. It's so much easier to be safe on your phone than be on the browser. It sometimes doesn't appear that way, but when we analyze when people really fall for phishing scams or something, in 99% this happens on browsers and not on mobile phones.
Yeah, so you can see the earn function. If you open your mobile phone, you go to bake, and on top of your screen will be the new earn product. If you click on it, on top of the screen, there is also a button that is called Learn More. And we go into the most frequently asked questions. So most of your questions will be addressed there. And if you want to read on it, there's also a blog on blog.cakedefi.com. There's more information that will follow.
Cool. And should you have any questions right now for us, you can also just tweet at us at the moment, and then I'll try to pick up that question and answer it. In the meantime, let me go through a quick overview of other updates that we have had at Cake before we're going to talk about the general markets. A couple of things here. I'll be talking with Cointelegraph, also coffee and crypto on Thursday. It's going to be midnight here in Singapore, 12 p.m. Eastern Standard. We'll talk about markets, Bitcoin, Ethereum. If you want to tune in, it's going to be quite interesting to discuss this with Cointelegraph. Ethereum Ethereum merge should be happening in 2 days. There's actually Ethereum merge. Google actually have their own countdown. Quite interesting that they're doing this. So we still should be merging on Thursday, so targeted the 15th. And we're also going to have an Ethereum promotion. We're also going to have Ethereum staking, not in 2 days, but we're going to have that. And one key thing, and I really want to highlight the importance of that, is that we're going to be running our own infrastructure. It's going to be tied to Singapore, and I really want to highlight that. So you're not like you have no exposure to the US, you have no exposure to Europe or whatever other jurisdiction. You're going to be in the Switzerland of Asia, and this is important and can be super important when or if sanctions come in, or when there are, I don't know, when there's user activated forks. So yeah, this is going to be really, really important. We're not going to mingle the nodes. It's going to be purely ourselves for our customers, and that's going to be an important one. Yeah, we're going to have a freezer promotion on liquidity mining. We have the Ethereum Learn and Earn, so you can learn about Ethereum, earn money from that. And yeah, we have listened or heard you on the Ethereum address creation. We have dropped that to zero with a minimum deposit. So this should be really in your interest and should really kind of push that. Anything I'm missing here on the Ethereum side, Fabio?
No, it's going to be a super exciting week. Like I think all eyes, both no coiners and crypto people, it doesn't matter if you're Bitcoin maximalist, if you're an ETH maximalist, if you're part of the ecosystem, it doesn't matter which community you're in. Everybody is watching what is going to happen in about 1 day and 20 hours. The ETH merge is definitely one of the most exciting things that is happening this year. Super excited. Yeah, I will have my popcorn ready.
Definitely. Yeah, so it's going to be interesting. I mean, I am an Ethereum holder, so obviously I really hope that it works out, but it's going to be, yeah, quite some, it's going to be a big showdown. So definitely interesting. Then we have reduced our borrow against crypto to zero interest rate. So if you want to check this out, go to cakedefi.com/borrow. Also, we had a massive media lunch today here in Singapore, discussed with quite a lot of news outlets, future, what's happening. There will be quite a few news articles coming out. This one is from The Edge, talking about the road forward for B2C, which is going to be all about crypto robo advisory. So a lot of the services around DeFi, yield generation, but having robo help in the decision making. So that's going to be something that's very, very powerful for next year. Obviously, also that we want to work more and more with B2B. We have started this year and really kind of expand that. So that's going to be a big focus. And a lot of work on the R&D side. So birthday research, if you haven't seen that, we're doing a lot of blockchain R&D. We're investing $50 million over the next 4 or 5 years with that, and really want to become a powerhouse when it comes to blockchain R&D. So that's going to be definitely an important one. So check this out. We'll link everything up below. I'll also share about us growing just today on Twitter. So we're close to 150 people now in the company. Really unbelievable. 6 hires in September, 86 hires the entire year so far. We have 22 live roles. You can go to cakedefi.com/jobs. And people asked if this is all me, if I'm meeting 41 people. No, this is our team, not me. So that's the hiring team. And I also didn't do 29 interviews. I wouldn't have the time for all that. So yeah, we are still hiring. Again, we have 22 roles. So open. Please join us. 2 other things I want to share. This is going to be shared though via screenshots. One is we have a happy winner of the free holiday, Klaus. congratulations. So just wanted to announce that here as well from my side. And the other thing, oh, wait, you can't see that. Sorry, you didn't see that screen share here. Klaus, congratulations. And the other update here is push notifications. I hope you have your push notifications activated for your mobile app. It's going to be very, very, very juicy and interesting for the rewards for you. So you're going to see this. They should be coming in. There's going to be also for security. It's going to be very important. And that's why I'm saying the direction is going to be very clear here. We're going to go not only mobile first, but at some point, all the key functions will be mobile only, just because it's so much safer, so much easier, so much more streamlined. And yeah, it should be totally in your interest. We're not going to take away the informational thing on the web app. Don't worry about that. But just from security and all these aspects, mobile is just so much cleaner and easier than on the computer. Yeah, these are the cake related updates. Main one definitely earn, quite exciting. And yeah, all the little small updates. Anything that I missed, Fabio, that you feel is worth mentioning here?
Yeah, super excited about the push notifications. And maybe one slight thing to add. So I'm a beta tester on the Cake app. So meaning if there is new product updates and new features that we are testing on our staging system, I get to see them first. And right now, when I open my Cake app, the reward dashboard is back. And so I'm super excited about that. I still no timeline. Eventually, we're going to push it out to everybody. Suddenly, you will open your Cake app and it will be back. I know this is one of the most requested features that the community has, and yeah, amazing that it's finally coming back. Yeah.
Oh, yeah, definitely. Again, shared all the links under the Twitter space, and you're gonna find it in the show notes as well. Yeah, afterwards on YouTube or in the podcast. Great. With that, let's move on to I think the key thing that's happening today. We should have the August CPI numbers coming in. Do you want to, I don't know, lay a bit the foundation there, Fabio? What's expected? What are the ideas? I don't know what's gonna happen from your side, kind of point of view, and let's discuss a little bit.
Yeah. So you need to. It's probably important to understand that the Fed's decisions are highly influenced by the CPI numbers. So their mandate that they have is price stability, and which means inflation is a core component of how they are moving forward and how they are taking decisions. And so if you're listening to anything that Jay Powell says, it's super difficult to read between the lines. And because he uses a certain kind of language when he talks about things in his speeches. And if you're not trained, if you're listening to a speech for the first time, you probably think he didn't say anything. But between the lines, you can really feel and hear that the number one thing they are paying attention to is inflation. So, and what they want to see is a consistent downtrend with several prints following each other that are lower than the ones before. And if they can't see this, they need, or they feel the need to increase the rates or keep increasing the rates. So if they can see that CPI is lower and lower and lower, so meaning a trend is established, then they might consider slowing down the rate in which they increase the fund rate, or that they eventually will pivot. And we had a lower print in July compared to June, slightly lower. I think we went from, I'm not 100% sure, 8.6 to 8.3, something around that. And now everybody's watching if the next print is going to be lower than the 8.31 that we had a month ago. I think regardless of what the print will be, I'm expecting a 75% basis point, and I feel that the market is pricing in 75% basis points in next week, the 20th of September. At least that's the feel that I got. What do you think, Julian?
Yeah, I 100% agree. I think at the moment, the expectation is that August should have dropped in comparison to July. So anything, I think the market at the moment is pricing in about 8.1%. So a small decrease from months over months, but obviously still a significant increase from year over year. And yeah, I think anything 8% or lower would really surprise the market. Surprises, despite in this case, means like, okay, wow, we're not increasing as much, but surprises are never good. The market never knows how to react to that. So anything under 8%, I think, would be really surprising. Any increase would be super detrimental. So if we would see 8.5% or up, this would be absolutely yeah, absolutely insane, because then we are kind of going higher than July, and this would definitely not be good. So yeah, I think nice would be to see something like 8.1% or something. That would be good. And yeah, but Fabio, you kind of mentioned it really, I think, well. Key is gonna then be, how is the Fed gonna react to that? At the moment, the Fed is, I think, 90% of the market participants are expecting a 75% rate hike. And yeah, I don't see how they're going to do 50 basis points. I don't see this. I think the risky kind of one would be if inflation goes up unexpectedly, then maybe they're going to go for 100 basis points. I also don't hope that. So yeah, and that's a bit what we have been seeing here. And then obviously in 2 days we're gonna have jobless claims in the U.S., and the U.S. matters here a lot and all that. Yeah, what you just don't want to see there is that suddenly there's a spike now in jobless claims. Because then this may also mean that the Fed kind of sees that they may be a bit overdoing it or underdoing it. So again, you want to keep everything kind of, I think they're expecting like 227,000 or something, and anything in that range is relatively healthy. So yeah, with all that kind of summarized, right, and that actually is the big setup to all this, and then we can dive into the markets. Um, all this is actually very much playing into what most of us, and we've been discussing this here on the show over and over and over again over the past couple of weeks, is actually kind of tying in really nicely to the entire game plan. And we have seen the US dollar index peaking, or so far peaking, last week. And since then, we've actually seen a gradual decline down. And that decline down of 2 to 3%, and this is a lot for the dollar, right? So if the dollar drops by 2 to 3%, this basically lifts everything that's floating on top of the dollar. And in this case, stocks, crypto, and so on and so on and so on. And that was also kind of the lead up to why we have seen such a significant bounce in the entire markets. And that's kind of the lay or the shift over that I want to discuss next. Unless Fabio, you feel we're missing anything here, because otherwise we should talk a bit about crypto and the general markets and everything that's going on, right? I mean, that's at least what I think. Yeah, and I mean that dollar, right? And I discussed this on Twitter yesterday as well. The number one thing on macro is the number today. 8.1 is expected. That would be great. Anything under 8%, I think, would be a bit surprising. So let's see where this is going to go. And yeah, that has led to that massive bounce up here. I had also discussed that a key number is going to be to break the 22,000. The reason was we dropped from 25,000 down to 18,500. So about 7,000, more or less, not exactly, but more or less. So the 50% mark of that is always important from like a mindset kind of momentum. So if you added about 3,500, you would end up exactly here at 22,000. I'm definitely not a chart astrologist. Don't get me wrong here. But I also understand that these momentums and these kind of emotional things are important. You could see that initially that bounce was kind of getting stopped by the 22,000 mark. And then, yeah, it really started thriving. It started thriving simply because the US dollar had this, yeah, weakness at the moment, if you want to call it, for the past week, and that really led to that recovery. And at the same time, the I think the inflation numbers are very expected to be within the range that we're seeing. And so that has led to that bounce, but not only on crypto, also on the entire general markets. It's been it's been um, all over for inflation in a positive trend here. And then if we take this then a step further, look at the entire kind of crypto markets. Bitcoin has been leading this rally. That has been quite impressive, which always shows that the reason actually this is leading is a very fundamental reason, right? So it's not a hype crypto reason. That's also important to understand. Altcoins have been trailing for the very first time in those rallies. I mean, you can look, okay, Solana is here a bit of the exception, but if we just sort it, right, you're not going to find many altcoins outperforming Bitcoin over the last 7 days during this rally. And normally during a rally, it's the exact opposite, right? And so the reason is because it's a very fundamental rally here and not so much a crypto led rally. And you can see this if you go on Google and you look for Google searches. Google searches for buying crypto and buying Bitcoin and so on are like super low. I think they're talking about a 2-year low or something. So the interest in general is really, really low. However, the current participants in the markets are feeling that the weakening dollar at the moment, and I mean weakening is not the right term here maybe because dollar is at a 20-year high, but kind of the receding dollar from the top there obviously is lifting those boats. In this case, all any kind of investment, any kind of coin, and so on. And we see this that it's actually not the alts, but it's actually the mother of all cryptocurrencies. And that's definitely quite interesting to see in the bigger scheme of things. One thing I do want to point out, and then Fabio, I want to hear a bit of what do you see on crypto talk, on crypto Twitter, and so on. I do see though that a couple of things that are like weird, right? Let me first maybe go into the overview. So that's Bitcoin and Ethereum. Bitcoin is close to an all-time low when it comes to the dominance. So Bitcoin definitely needs that bounce right now because it's really, really close. At the same time, Ethereum is close to an all-time high. Obviously, with the merge that may happen or should happen in 2 days. But then if we look at especially the last couple of days here, especially since that rally, Bitcoin was now climbing back to the 40%. So it's kind of saving itself from like really dropping significantly lower. I think the all-time low for Bitcoin has been at 32.44%. So there was not that much left until that all-time low would have been broken. So as a whole, definitely an interesting time in all of that. But before we talk maybe a bit about where this could all lead, I want to hear a bit, Fabio, what do you see right now? Anything that you feel crypto Twitter is talking about? And then we could discuss a bit on what could September bring, what could the rest of the year bring, and so on.
Yeah. The main thing is there is still so much hopium. There are a few accounts that they show these charts that Bitcoin is going into the direction of all-time highs and that we are going to see a strong recovery. I have one issue there, and this is the correlation between the NASDAQ, the S&P 500, and Bitcoin. It was never as high as it is right now. We are, I think, at 0.93 correlation, and the correlation is like it's super strong at the moment. And the things that I want to pay a lot of attention or that fascinate me the most currently is there's two things. One is like a very specific crypto thing that everybody that has been around in 2017 and 2018, we saw at the end of 2017 with the blow off top, we saw Ethereum capturing a lot of market cap, and the narrative of a flippening was the narrative. Everybody was talking about Ethereum flippening Bitcoin, and it came super close to it. But right when it was about to happen, Ethereum practically lost a lot of ground against Bitcoin. I'm watching exactly the chart that Julian showed. So what did he show? He showed the Bitcoin dominance compared to Ethereum. So I think this chart is probably the chart to watch. And there is two things that are kind of playing into this. So one thing is, of course, Ethereum is moving to proof of stake. And a lot of people like Raw Paul, he made a few statements that there is a lot of capital waiting on the sidelines, jumping onto a successful merge, which makes complete sense in my opinion. The other thing is the CME group just offered futures for and options for Ethereum. The last time this happened for Bitcoin was at the top in 2017, and the prices decreased from then on onwards. So we don't really have a lot of data points. We don't know if this is true for Ethereum as well, but there might be a chance. So this is the things that I'm closely following within the crypto space. Like the narrative of flippening, Ethereum approaching more market share, Bitcoin losing market share, Bitcoin dominance, super interesting. And the other thing is more on a macro landscape is, so I think we could say we are in a bear market right now, both in equities and in crypto. Maybe a recession, maybe not, depends on your definition. But in these times, we Bitcoin never experienced a recession, so we don't know how Bitcoin is going to behave. There is a few theories. If you look, for example, what happened in April 2020, when the liquidity practically got turned on to the COVID crash, Bitcoin was the first asset to react, and it reacted the most drastically. It had the most gains, and it kept a lot of its gains as well. So at the moment the liquidity is turned on, Bitcoin tends to pump. And this is something I'm watching very carefully right now, because we don't know when the Fed is going to pivot, but eventually they will. Nobody can give you an exact time frame. My estimate is that they're going to hike rates until something breaks.
That was cheating on the words, huh? Let's test you again. It's raising rates, difficult term, huh?
Raising rates. Yes. So we don't know before the midterms, after the midterms, this year, next year. But if they are going to increase liquidity, again, quantitative easing on, money printer on, I think Bitcoin is going to react, crypto is going to react crazy. Liquidity on, risk on, let's go. And the other thing is, so if you, a lot of people confuse, so they say, oh, gold has not performed and we're in a recession and shouldn't gold go up? One thing that is important to understand, in every crisis, so the last crisis, for example, in 2018, gold had a big sell-off as well. But what's important to consider is gold or metals are usually the first one to indicate a risk-taking is coming back. So that these are people that mostly convert fiat into gold. And usually gold is the first to move after the recession or after the bear market. And I'm kind of watching both very closely, Bitcoin and gold, because I feel that this is still true, that gold or Bitcoin are likely to react first or pump the hardest when we eventually go out of the crisis. Yeah, what about you, Julian? What kind of assets are you watching? Do you have a plan, or yeah?
I mean, I haven't shifted much of my plan. I rebalanced over the last 2 months. I've been talking about this year as well. So I just basically rebalanced out of cash. Cash just outperformed, or the dollar outperformed way too strong. So far, that rebalancing really paid off, because we have seen a bit of a crypto rally, seen a bit of a stock rally. So quite happy so far. I can't complain. I said if by the end of the year I manage to actually end up in the plus, that will be outstanding. I'm not expecting more. We've just had a webinar on Saturday in German, and then I was talking about something rallying, and someone said, "Rallying? What does rallying mean?" I said, "Hey, rallying just means right now that you are making positive returns, right? Rallying is not like making 500% anymore. Like 50% is already a rally at the moment, like massive in crypto, right? Because many rallies right now get sold off really quickly, just because people really kind of they take anything that they can. One interesting chart I just want to show here, for example, is overlaying the Bitcoin halving cycles. Again, we can discuss whether there really are Bitcoin cycles, but I mean, or if they are actually triggered by the Bitcoin halving, or if it's actually geopolitical events, macro events. For example, 2013 kind of killed the cycle via Mt. Gox. 2017 was via ICOs. 2021 was because of the Fed, right? None of those three kind of events actually had anything to do with each other. We can now say, hey, this was causation, or maybe it's just correlation. Who knows, right? But so one thing that's really interesting. So if you overlay those cycles and you believe a bit in those cycles, you see a couple of things here. First of all, you see that the top has been going down in percentages. So the very first cycle, which basically was 2011 in this case, you had, for the that was the very first cycle all the way until 2013, and so it had this kind of boom here at 539x. Then the second cycle had 112x, so it was like a fifth, and then another fifth in this past cycle that so far peaked at 21x. So if we kind of use some kind of math here, we could say maybe the next cycle only has 4x, which actually is quite reasonable if we then calculate where could we find this bottom here, right? And so the bottom here, 83, well, now we are here at maybe divided by 4, so maybe we see a little bit further down, but it shouldn't be so much further down anymore, right? Maybe we see a little bit further down. So maybe we're going to end up here at kind of 5x or something. Then we're talking about a bottom at 16,000, 15,000, or maybe even the bottom was at 17,000 that we have seen already, right? So I think this is, I think we're good there. But then it gets very interesting. If we then find that bottom, and that bottom in theory here should still be out. And I also believe that I think the bottom is actually going to happen rather in 2023 than this year. So probably first half of next year or something, we're actually going to see the real bottom. Maybe it's not going to be the absolute bottom, but that's going to be the actual turnaround, right? So it could be that this is just like, I don't know, 20,000 or 21,000, but it's actually going to be the turnaround. When then this next halving rally is going to start. And well, if you then start calculating here, with the next halving in 2024, based on all these numbers, we should be anywhere between 30 and 35,000 if these halving cycles repeat. So over the next, whatever, 1.5 years, we shouldn't see much more than a little bit of an increase. But this is also very realistic. If you think about the current sentiment, you compare this to past kind of cycles. So I don't think that's too unreasonable. But now comes the interesting thing. If you then go and say, hey, we're going to see another, I don't know, 80% reduction in returns, maybe a 4 or 5x only in this next kind of cycle, we should be ending up at, I don't know, 140, 150 in Bitcoin, right? So 140,000, 150,000 in this next kind of cycle. And then maybe in the cycle afterwards, we're only going to see a doubling in price, right? Which then could lead us to, I don't know, 300, 400, 500,000. And then maybe it's going to go down and we're only going to see 50%. But if you kind of work this out, this easily means in the next 3, 4, 5 years, Bitcoin is going to go into the hundreds of thousands. And in the next decade or the next 10 years, we could get closer to $1 million. I don't think that's unreasonable with all the money printing, with all that growth, right? So just like you need to see this also in a big picture. I know people want to see the $1 million right now. This, again, we're talking here about 10 years, right? We're talking about 2, 3, 4 kind of cycles over time. And I think that's just really, really important and realistic to understand. So just kind of keep that a bit in mind, and keep a bit in mind that we're probably not going to see all too crazy kind of returns over the next 1.5, maybe 2 years. And it's just going to be a bit of an up and down. And as soon as it goes up, people start selling relatively quickly. So just kind of be a bit patient and use this more for dollar cost averaging. Obviously, use it to get cash flow. I think it's really great times for that. Maybe just for some comparison here on where we all in all of this. Stocks have done relatively well in comparison to past crashes. So it's been doing better than the COVID crash. It's actually for stocks, there would be still a lot more kind of downside, 10, 15%, and still way longer in time of days, right? So here in stocks, until it actually finds a proper bottom, could also take 1 or 2 years. So I don't see so much of a difference in all of that. So if you really look at that, Bitcoin, Ethereum, still a little bit more potential downside. But again, it's not so crazy. I think the prices we hit on Ethereum and Bitcoin in 2 months ago, I think these were the like good kind of levels. So it's just that people need to understand that this may not take, like, it may not have a super fast recovery right now. It may just take a bit longer. I think key, obviously, we're in September. People always call this like bear or September bear or whatever. We showed that. I just want to highlight that, right? So if we kind of look where we could end up, generally it all looks a little bit more on the bearish side. But because everyone is expecting it to be bearish, maybe we're going to see one of those few months that actually where September turns out to be bullish. So Yeah, I think a wild card. I actually just spoke to u-zyn about this. u-zyn, our co-founder here at Cake, is part of Mt Gox, and I mean he's part of that claim. Not he didn't work at Mt Gox or something, but he's waiting for bitcoins from there. And they made, I don't know. I've seen conflicting statements. u-zyn also doesn't fully understand what this announcement now means, that on September 15th, that deadline for repayment, at least for changing the funding addresses and so on, that's going to stop, and there should be the start of payouts or something, right? So that's a bit of the kind of wild card. What does this actually mean? It's to me not 100% clear. I discussed this with u-zyn as well. He didn't fully understand that. I don't know, Fabio, if you heard something, but I think that's a bit of a wild card. Other than that, at the moment, it looks all quite constructive, unless you have a very short time horizon. But I don't know, Fabio, what do you know there?
So on the topic of Mt. Gox, I don't know anything more than you or what is written in those letters. I think the 15th is the start that people could see their first reimbursement, but this is staggered, so this is going to take months. Some say it's going to take years. I actually don't know. I just saw the communication that they are looking to start Thursday. So over 2 days, they are going to look into starting reimbursements. And how this is going to affect the market, nobody actually knows. Nobody knows how much the users are getting and how they are reacting. So this is pure crystal ball thinking there. Maybe one other point that you made just now is sometimes, or actually a lot of times in bear markets, I realize how spoiled and how delusional we are in the crypto space. Because if you go back into 2010, like the period between the 90s and 2010, somebody would have said, if you read any book on investing, or I don't know, the old ones, let's say the Bible, the Sophisticated Investor, or
Intelligent
I don't
investor, yeah.
intelligent investor. The 10% is good. Like if you manage to do 10% every year, you're doing amazing. Like there's hedge funds that are not able to do 10% a year. If you do 20% a year, you're killing it. And here in crypto, we the people are like, oh, 10x, that's not enough. 100x, that's not enough. I don't know. I don't invest in Bitcoin. It can only go up 20x. I want to get like 100x. I want to get 1,000x. And just to be clear there, it's so difficult to actually realize this. So this means it's so easy to look in retrospect to see a chart, and if I would have bought here and if I would have sold here, shoulda, coulda, woulda. This it's not the reality. And of course, you read about all these stories, or you see these screenshots on Twitter where people share, "Hey, I made 100x, I made 1,000x." But these are the things that get attention. Not everybody is actually doing that, because it's not reasonable, and it's not sustainable as well. Yeah, so I definitely think we are a little bit spoiled. On the downside, the chart that you showed, I'm going to bring in a little bit of conspiracy and a little bit of meme here as well. Like if I would make a prediction on where the bottom is going to be, and how the price is going to move, I feel that around between 15 and 17.5, this is where I look for a potential bottom, because 17.5 max bidding, you better believe it.
That's funny. Nice. Yeah, no, but I think at the moment it looks quite good. Again, I think yeah, I always imagine Hannibal sitting there with like his smoking his cigar. I love it when a plan comes together. That's a bit of the Democrats at the moment, I feel, with the midterms. Um, yeah, their numbers are looking good, improving, and I think most people are not so much aware of that. Yeah, the stock market is doing well, and that plays into their hands. COVID doesn't seem to be a topic anymore. The entire Russia, US, Ukraine, Europe topic, at least, again, I'm looking at this from outside, right? I'm looking at this from Singapore. It's always a bit of a different topic. Seems to be improving. Uh, Stock market, the dollar seems to be easing. U.S. Oil comes into the market, prices seem to be easing. So a lot of these things, right? Inflation seems to be easing. Yeah, it's. I mean, we discussed this, right? Midterms going to be a key one. 7 more weeks. That's going to be the pivotal event for me. So let's see how this plays out. But at the moment, I wouldn't bet against that. I would be very careful if you're just staying in cash right now and believing that you're just waiting on the sidelines. This can be dangerous because then it makes you emotional in the wrong times, and you don't want to do that. So, uh, yeah, that's it from my side. Fabio, anything that we missed? Anything you want to mention, or anything we need to mention?
One thing that we touched on last week, and I think the week before that as well, is and that I'm also watching very carefully because I'm also affected by it. But this is the rising price of gas here in Europe, and for the first time in months or even in years, we could see a decline. Of course, this is way too early to say if something peaked or if we're going to see higher prices or not. But definitely welcomed that, especially the futures. So the prices that these assets trade in December and January, like mid-winter period, they seem to have peaked quite drastically. I think we saw a correction of about 20% from the highs. If there is follow through, like if the prices are trending lower from here, we don't know, or if they are going to increase again. But this would, of course, be for everybody that is living here in Europe and warming their houses with gas, like I do. This is very much welcomed because, yeah, my gas bill here in Europe, it's practically increased by 300% compared to a year or two ago. This is the only thing that I would add. And other than that, I'm doubling down. Go onto the Cake DeFi mobile app. Go and try the new Earn product. Put some small amount in to see and feel how it looks, how it feels, and it's a great product UI wise, and especially if you're a beginner in the crypto space, I can highly recommend starting off with that product. Yeah. Other than that, we're doing this every single week. If you missed the beginning, or if you want to have a video along way, this will be on YouTube tonight. This will be on Spotify. This will be on Apple Podcast, and of course, as usual, I'm very thankful to have you all joining us for these discussions. And thank you for you, Julian, for being back and making my life a little bit easier.
Of course, always. Thanks, Fabio, as well. Everyone, stay healthy, stay safe. See you soon next time. And subscribe, follow, like wherever you're watching this. And thank you so much. All the best. Yours truly.